there's really great yields in treasuries. Now, if you have all your money at B of A or Wells Fargo or Chase, I can't help you because I know they're still paying 0.05%, but everywhere else is paying a lot of money on safe money. So treasuries, you could buy a one-year treasury and get 4.5%. The great thing about that is there's no state income tax on treasuries. You can buy them direct, you can buy them through your broker, they're there. Look at the yields. So 1 year is 4.5, 2 years 4.4, going down even to 6 months is 4.5 almost, and 3 months is 4.1. Many money markets, like we look at the Schwab money markets, we work with Schwab, they're paying more than 3% on their money markets. So those are great yields for savers now that weren't there this time last year, for sure.
So recently, I've seen a couple of people come into the office with like a few $100,000 sitting in their savings account at Chase or Bank of America. If you're one of those people, the banks know, the brick and mortars know that they don't really have to match interest rates. You're just going to keep your money there, like by default, because it's hard and complicated and whatever. But you can open an account at ally.com. So another FDIC insured bank. Up to $250,000 you can put there. And every day I get an email from them that my rate is going up. So now I think I'm at 2.3%. In a savings account, I can open online, connect my checking account to it, and transfer money back and forth within 2 days. So get out of the brick and mortar banks and put your money in these other companies. And if you're socially responsible minded, a good alternative to Ally is called Aspiration Bank. Same situation, same FDIC insured bank, paying the same interest rate, but they're a B Corp and they reinvest only in socially responsible investments.
And just for comparison's sake, if you could move from like a B of A or Wells to one of these accounts at one of these online banks, you're going to get in 1 year the same amount that Wells would pay you in 50 years. So you can see the difference. It's astronomical. It's free money for the taking without any additional risk.
One final thing to note on this, you're seeing the returns for 3 different assets, U.S. Treasuries, corporates, and municipals over various time periods. I think it's really interesting how corporate bonds are paying less than the guaranteed U.S. Treasury. So I would say if you're a big bond person right now, why take the risk here when you could be up here in the guaranteed treasuries with no state tax on
That's
your
an unusual
interest.
condition, usually because corporates are riskier than the government. So you'd think that the yields would be higher, but they're not.